You just basically said mobile's fantastic, but isn't paying the bills.
No, that's not quite what I said.
Okay.
Mobile is great. There's a transition that's going on right now. The companies are going to be fine, but it may take a little bit of time for mobile to get monetized as highly as desktop.
Have people not figured out how to do the ads right, or is the actual screen format not as conducive to ads?
Yeah, I think you answered the question. It's early, and the screen is small, and the ad units haven't really been rolled out effectively yet. There's some companies that are doing it pretty effectively. Twitter's had some very good campaigns, and other companies have. I think we're still early in figuring out we're still figuring out local and social, and I think we're going to get there. I think the overall market is for companies, and monetization is really healthy. I think the valuations in the private market are high, and we run a $1 billion digital growth fund at Kleiner Perkins, and we didn't invest a penny in the March quarter, and we looked at a lot of companies, and we loved them. We just were having trouble getting comfortable with it. An app that I'm really excited about, and I mentioned it a couple times, is Waze. And I say that because I work on Sand Hill Road. If you try to go up 280 or down 280 on a Friday afternoon, you want to know when you should get on the road. You want to know what the other drivers are doing. And I don't use Waze when I go to the office in the morning because I sort of know where I'm going, and the traffic will only slow me down for 2 minutes. But when I'm in traffic, I count on it. And I will always count on it, as long as they keep improving the app.
How do you use it legally? How do you use it legally in your car?
I just watch it. And when I reported the burning semi-truck, I pulled off on the side of the road. I made sure I was far enough away from the semi-truck that nothing happened.
Yeah, well, that was all smart.
So I asked Tim. I said, "So Tim, they're really gaining revenue share against you. How do you feel about it?" And he said something to the effect of and I said, "Yahoo's the same as it's always been. It's just a really basic directory." And he said, "Part of the secret sauce is we're fast, easy, and fun." And so it has to be fast, you have to be able to get it quickly, it has to be drop-dead easy to use, and it has to be really fun and useful. So you're asking the question in the context of Vidi, what makes for success? What makes for success is people just love using it. And that's a je ne sais quoi kind of thing. But I think when the products that get it, they get it.
So how would you have done, you used to work at Morgan Stanley, would you have done it differently? Is there...
Done what differently?
The Facebook
what are you
IPO.
Talking about?
The Facebook IPO, had you been involved?
So I do not have any specific information on this. So I will opine on it based on what I've read in the media. And number one, Facebook shares were trading at a $104 billion valuation on second market. So they were trading at that valuation in a private market. When the IPO was the largest IPO in market cap in the history of probably the world, but the United States for sure, it had more trading volume on its first day of trading than any IPO in history. 45% higher, 42% higher than General Motors, the previous precedent. On its first day of trading, it traded as many shares as the average daily trading volume of the entire New York Stock Exchange, and 1.5 times the trading volume of the NASDAQ. And so I bring all that up. This IPO was a financial share tsunami. And so it was just coming in, and NASDAQ was trying to process all this stuff. So to go back, I just wanted to give that for context. That's hard stuff. Have you ever been in a tsunami or a hurricane? You know, and I don't, those are environmental tragedies and human tragedies. This is different, but it still is a thing that is just a wall of something. And I think for Facebook, you ask about what would I have done, the stock, I think right now is trading near the low end of the initial filing range. I'd call it $28, $29 a share. I'm not watching a Bloomberg monitor up here, but that's close to where it is. And that was the low end of the initial filing range. They priced it higher because they were looking, these people are very good at what they do. They're measuring minute by minute, what's the institutional demand? Where do they want to buy this? They're not just doing it in a black box. People are saying, I'm in at this price, I'll buy more at this price. So they're getting constant feedback. They raised the price, it traded up, and then people got shares, and NASDAQ had a trading issue because it was dealing with this financial tsunami. People owned shares, they didn't even know they had them. And so there was, I've heard 2 hours, I've heard more, a gap in information, and then the stock started to trade down. And confidence and momentum in markets is so important. So people didn't even know they had stuff. They got stuff. They knew they had the shares, and the stock was already lower. And they said, I'm out. I'm scared.